titled Accessing Small Business Stimulus Dollars under the CARES Act. At this time, all participants are in a listen-only mode. For those of you who are logged into the web presentation, you're encouraged to submit questions throughout the conference by typing them into the text box located on your screen. Currently, you are defaulted on the Q&A tab. If you should need technical assistance, please be sure to click on the Tech Support tab that is next to the Q&A tab. For those interested in obtaining CLE credit for this webinar, an attendance verification code will be read during the presentation that will be required on the CLE attendance affirmation form. Please write this code down. It will not be reread, and it is required for CLE credit. Copies of the webinar recording and the PowerPoint presentation will be distributed to attendees in the days following the webinar. At this time, I would like to turn it over to Marco Barnes. Marco, you may begin.
Good afternoon, everyone. Welcome to Seyfarth Shaw's webinar on accessing small business stimulus dollars under the CARES Act. A lot of work goes into producing these webinars, even under normal circumstances, which these are not. So I'd like to take a second just to thank members of the Seyfarth COVID-19 Task Force, including Bill Eck and John Shire and others on Seyfarth's COVID-19 Task Force across the firm. I especially want to thank other members of our team, Tony Roseline, Carrie Hacker, and Jenny Lee, who worked very hard to help develop this program. My name is Marco Barnes. I'm a corporate partner at Seyfarth, and I'll be leading our discussion today. The purpose of our discussion is to survey the available programs to assist our country's businesses through this challenging time. Although we will be focused on 4 SBA administered programs, there are actually 12 or more SBA administered programs that are available to small businesses, including veteran-owned enterprises. I know firsthand the burden and privilege of making payroll and as a small business and otherwise having to people rely on me. Although the panel will be emphasizing careful thought in developing your business strategy, doesn't mean that you wait a week to submit an application, just that you pause a second to carefully think through it. But I can definitely appreciate the urgency. One final thought that I'd like to share, I'm fortunate enough to have a mentor and a friend named Emmett McHenry. My earliest memory from that, the start of that relationship 20 years ago is Mr. McHenry saying, Marco, don't let the stimulus dictate your response. Now, obviously, he was talking about a different type of stimulus, but those words have taken on a quite literal meaning for me, and I suspect for a lot of other people. Over the last several weeks, I am encouraged by the things that I have seen recently at work and in my personal life. But today, me and the panel will largely be talking to you about accessing these loan programs and your business strategy. Next slide, please. So before we get started, a few announcements. We will be having an update to this webinar. Obviously, this is a rapidly developing and fluid situation. We intend to keep you informed of the latest developments that may impact your business strategy. To that end, you should visit our COVID-19 Resource Center to sign up for important daily updates. That information is listed within the deck. These issues touch on virtually every aspect of your business. Our corporate department, our labor and employment department, and other teams have been working long days and weekends to help clients develop their business strategy and otherwise to respond to these and other issues. Lastly, if you need help, you can contact your Seyfarth attorney contact. Alternatively, you can send me an email, and we will get back to you right away. My email address is listed in the deck as well. It's mwbarnes@seyfarth.com. Next slide, please. So I have the privilege, and we are very fortunate to have some very accomplished speakers joining us today. Don't have time for introductions, but I'll just sort of briefly present them to you now. We have Chuck Evans. He's an EVP at Windsor Advantage. one of the largest, if not the largest, lenders in this space. John Fleming, who is a district director at the U.S. Small Business Administration. And we have Alvin McCoy, CFO of KE Holdings, very experienced in the use of loan products and other tools to execute business strategies. Next slide, please. So this webinar is broken up into 7 parts. I'm going to quickly cover what I consider to be 2 threshold issues. I will review the landscape, talk a little bit about small business concerns generally. The reality is each one of these could be its own webinar, or maybe even own series of webinars. But we'll be talking about these 7 topics. Today. So items number 3 through 6 will be covered by Chuck and John in our panel. They'll be starting off by overviewing the 4 loan programs that we've identified and talking to you about eligibility, documentation, application cycle time, and disbursement issues related to those loan products. And finally, we'll conclude with the discussion led by Alvin McCoy. Alvin and I will be talking about business strategy and generally how to use the information we're talking about with you on the call to execute it. Next slide, please. We will close out the webinar. I'll just say before I get started with the Q&A session, of course, there are over 3,200 people registered for this webinar. We will try to get to as many questions as we can before the end. If we don't, we'll respond separately. And of course, there's a webinar next week where we'll be touching on other questions and also conducting a Q&A at the end. So I'd like to start by talking about the landscape. Next slide, please. So generally speaking, the CARES Act was just passed last week, and we are still awaiting important guidance around various programs. It's still being developed and implemented. At this time, we think PPP by far has garnered the most attention, but as we'll be talking to you about throughout the presentation, businesses should examine all their available options and think carefully about their strategy, both for the application as well as the business in general. Next slide, please. So I want to just, again, touch on a threshold issue with regard to small business concerns. Next slide. Hands down, this has been one of, if not the #1 issue or question that we have been discussing during the past couple weeks. In this webinar, we have people that are small businesses who may not have thought about themselves or availed themselves of SBA administered small businesses in the past. We also have large businesses who have small businesses somewhere in their supply chain, either as tenants or vendors or whatever. So these are sort of new concepts for a lot of people, but generally, I guess what I'd like to say is that small business concerns are eligible for small business programs. These are evaluated based on gross receipts, number of employees, and in some cases, some other metrics using the Small Business Table of Size standards. In some cases, the CARES Act relaxes size and affiliation rules to provide relief to a larger group of businesses that may not have otherwise participated in an SBA-administered program. An example is the NACA 72 accommodation and food services. And we'll be talking about that a little bit later in the presentation. So at this time, I'd like to turn things over to Chuck and John, who will lead us through an overview of the 4 SBA-administered loan programs and the rest of the agenda. Chuck, John?
Great. Thank you, Marco, and thank you for having us today. What we'd like to do is to break this down into the existing programs that are out there available to small businesses, talk about the PPP and the EIDL loans, the programs that have just been initiated. But what I want to stress today is our objective is to outline to you what we feel we know and kind of outline to you what we don't know as it relates to the PPP program. So that's our objective today. There's a lot of unanswered questions that should be answered within the next couple of days because it's supposed to roll out on Friday. but again, we don't have answers. I've talked to, as a national lender service provider, a lot of banking institutions that are going in different directions as far as applications, telling their clients what to do and what not to do. And the bottom line is we don't know yet. There's 2 more days before we're going to get some of this information to really set up an effective and efficient delivery system. So let's talk first, if you don't mind, Marco, change the slide. Let's talk about the standard SBA loan and the Sba Express Loan. This program is designed for access to capital. It's a loan made by the lender. So when someone asks, how long does this take? You know, we have 2,000 plus active lenders, whereas 75% of them do possibly 10 loans a year. So the delivery system with that segment of the population is going to be a little different than the delivery system for the more active lenders that represent probably 80% of the loan volume. So when you, as a small business, will think about, do I have enough collateral for a regular 7A loan? Who should I go see? If you go to Bank A, you may get a different answer than if you go to Bank B, only because those banks all are working off of their internal policies and within the guidelines of that SBA guarantee. So again, this is the standard SBA program. They're designed, they're very, very flexible. And when I say the SBA 7A, that includes the Express, the SBA cap line. These are all direct loans from the lender that are guaranteed by the U.S. Small Business Administration. The maximum loan for the 7A is $5 million with a 75% guarantee. When it's 150 or 1,000 or less, it's an 85% guarantee. There are still fees on all of these loans. Today, those fees haven't been waived. In years past, they have reduced the fees or waived the fees, as you may recall, on some of the smaller loans. But again, today, the program guidelines for the 7A and the 7A Express, for the most part, are remaining intact with some small changes that we'll go over. The SBA Express today has been increased from $350,000 to $1 million through December 31st of this year. But again, the fees, the rate, the structure, the regulations are all remaining the same, at least as of today. For new loans, like I said, originated between March 27th and September 7th, the SBA will now cover the principal and the interest for 6 months. So on all new loans coming out of these direct lenders, the 7A, the SBA 504, which are economic development organizations, and mission-based lenders, as part of the stimulus, there is that availability to have the principal and the interest reimbursed for 6-month period. If you as a borrower are already on a deferment for whatever reason, you can add 6 months to that deferment. There's some technical aspects to this and how it's implemented. A lot of these loans are sold in the secondary market, so there's some coordination between secondary market investors, the borrower, and the bank as to how to achieve these things. But those are things that your lender, your SBA lender, will know and will help you with. You want to change the slide again, please? The Express Bridge Loan. John, do you want to talk a little bit about that, please?
Okay. Can you guys hear me? Good. So the Express Bridge Loan was set up because of the delay when it comes to mostly our economic injury disaster loans or any other loan that's available. So this was put out recently, well, immediately right after we were notified that the programs are going to change. It's been done in the past. It's been done before other lenders. It's an express lender for an SBA lender is a lender that can do loans on their own. They call them they lump them together with what's called preferred lenders, and they call them delegated lenders. This was just put out there as an option to really get you that bridge loan, get you to that time when SBA will be ready to fund you. And under normal circumstances, it could be 4 to 6 weeks in a best case scenario. So that's why we put this out in order to get the money out. It could be a borrower could go any route. They don't have to go to a bridge loan that is guaranteed by the SBA. They could go get their own bridge loan or use a line of credit. All of these can be refinanced when they receive funds under the EIDL, which we'll talk about later on in the presentation. So Express in general is a streamlined processing. It's a product that works well with banks, particularly if you're looking for a line of credit. But under the emergency circumstances we're in, they really saw this as a way of getting us to the next level, getting some cash in the hands of small businesses, and going from there. Next slide.
John, quick question on the bridge loan for the Express. That again is up to the lender and the lender's decision as to make these loans, correct? It's not an agency decision. Each individual lender will determine whether their borrower is eligible or not, correct?
Correct. We that's a good point, Chuck. We really at the SBA we set the minimum bar. I think it's a good point to make. We have certain rules, certain eligibility situations that come up. We may tell you in certain situations that you don't need collateral, but the lender may tell you that you do. And that's okay. It's a completely lender-driven program, whether they want to use it or not, and whatever makes them feel comfortable in terms of our loans. They can't take collateral on the side, things like that, but they have to stay within our guidelines. And if they want to add additional criteria to it based on bank policy, that's okay. For instance, some banks won't do loans that are startups. We will. We'll guarantee loans to startups, but some banks won't. So things like that pop up from time to time where there's a discrepancy between the agency and a lender.
So like the Express and the 7A conventional program, in any one market you could have 100 lenders in that market and have different and varying credit risk profiles with each one, all based on the guidelines with the SBA. That's important for borrowers and small businesses to know. You may go to Bank X and they will be comfortable with the credit. You may go to Bank Y and they may not. So that's lender driven is what we're trying to make the point.
Good point, Chuck. Next slide, I think. Okay. Economic injury disaster it's not a new program, but it's been enhanced for this current emergency. This is different. This is a direct loan from the government. The website is sba.gov/disaster. There's been several versions, 3 different versions of the application process since this started. Currently, there's the very, very simplified application. It can be done online, and the borrower they'll be asked along that process, they'll be asked about a $10,000 advance. Would they like to get that $10,000 advance? That's the latest wrinkle based on the CARES Act. So EIDL now has a $10,000 advance feature, and that's why we had to change the version this time around. It's all SBA originated. It's appropriated dollars direct from Congress. Interest rates are 3.75 for small business. $2 million is the maximum loan amount. And no repayment for the advance. So it's basically a grant, a $10,000 grant. Loan payments on this one are not due for 1 year. And this is really, because this is a direct loan from the government, it's not lender driven. We can be very, very flexible when it comes to this program. I've seen credit scores get approved under this program that would never get approved under a regular 7A loan. We're used to using this program. We use it mostly during hurricanes, fires, floods, those types of things. So it's in place. It runs well, and Congress usually funds it appropriately because in times of disaster they don't want any questions, so they go ahead and fund it. And the agency has an entire division that handles just disaster loans. It's one of our largest divisions that we work with. So EIDL, I know a lot of folks are out there applying for that right now because that was already in place. That was in place within 2 days of the national crisis started. And we are processing those loans as fast as we can. Look forward to, more funding for that program and really kind of a backdrop, a safety net, if you will, for anyone that can't get credit. Perhaps the EIDL loan would be the best way to go. Anything to add, Chuck?
No. You covered it. Thank you.
Next slide.
The Paycheck Protection Program is probably what most of you here on the call today want to learn about. And that's the program that we know the least about, basically. The EIDL loan has now been implemented. They're taking applications. It's a program that doesn't have the forgiveness features that the Paycheck Protection Program has. So again, this loan, like the regular 7A loan, is a direct loan from your lender. From the 2,000 active lenders that are here in the United States, they've also empowered just about any financial institution or credit union to offer this program. There is a loan forgiveness function, which makes this a very, very attractive feature. And it's, again, designed for payroll and short-term ongoing expenses, rent, utility, and other costs specified by statute. What we don't know is that Congress has implemented this program. Treasury and SBA have within their bandwidth flexibility to change certain delivery options with the program. And we'll get into that in a second. But it's a maximum of $10 million or the applicant's total monthly payroll for the prior 1 year period times 2.5, with some reductions for seasonal employees and other disaster loans. It's 100% guarantee. It's an SBA pays the origination fees. Today, the maximum rate is 0.5% for that portion of the loan that has not been forgiven. You can't use both the EIDL and the PPP for the same expenses. So that needs to be, and there's a lot of interpretation on this program that we're hoping to hear more about within the next couple days. So Marco, if you could change the slide, please. We're going to talk about eligibility requirements for some of these loan programs now, getting into them. So again, the standard SBA loan and the standard Sba Express Loan, up to $5 million for the SBA loan, now up to $1 million, at least for 2020, for the Express Loan. It's designed for small business concerns. Unlike the stimulus or the PPP loan, it's designed for owner-occupied small business concerns and not non-for-profit entities. What the SBA had concerns about were that we've reached close to record levels of SBA lending in the United States, getting close to $30 billion. And there were some, because of the secondary market, some abuses of the program. So Congress had charged the SBA and the Inspector General with monitoring the lenders much more carefully than they have in the past. And so as a result of that, in February, they came out with an interim final rule that addressed affiliation. It addressed the personal resource test, and those particular aspects of the program, what the SBA and or Congress wanted to do was to make sure that this guarantee program was being used by small business concerns that needed it, as opposed to someone that wanted to take advantage of some of the features. So what they said was, we're going to bring back what they call the personal resource test, which limits borrowers from using this program that had funds available elsewhere. And there was a formula that they had come up with, and then they determined affiliations. And so what's happened as a result of the PPP program and the EIDL program, they have rescinded that interim final rule, which was issued in February 10th and was in effect March 11th. So as of today, the programs will be utilizing the rules and regulations that were in place prior to March 11th, which means there is no personal resource test today. That still may be a concern of the lender on a direct loan from your bank or credit union, and the affiliation still may be a concern from the lender and or the credit union. So as a regular 7A loan, we as lenders are still having to address those issues. The Sba Express Loan, much the same as it relates to eligibility requirements. The big difference, it's gone from $350,000 to $1 million effective March 27th. The big difference between this program is that the lenders that loan this money have delegated authority by the SBA to make the credit decision and make the eligibility decision. So what you find is that you go to an express loan, the guarantee is only 50% versus 75%, but those lenders, because they could use some of their internal loan documents, can provide this loan program much faster than some of the other programs. I want to get into quickly the difference between delegated and non-delegated. Non-delegated lenders are required to submit their applications, their 7A applications, to the processing center for the SBA to approve it on eligibility and approve it on underwriting. That takes anywhere from 7 to 14 to 21 days, depending on how the centers are staffed. So that's a slower process in some respects, but it's a much more safer path for some of the lenders. The delegated lenders, the lenders that are active in the 7A space, have that authority to make the decisions on the regular 7A loan, make the decisions on the Sba Express Loan, and so that changes the delivery. But again, the eligibility requirements for these loans are almost exactly the same. John, is there anything that you want to add to that? Okay, next slide, please. The Express Bridge Loan, you'll take that one.
Okay, thank you, Chuck. So eligibility requirements on the Express Bridge Loan. It's a lot like Chuck said in terms of the Express Loan. The difference with it is they have shorter terms, therefore we're able to refi them out when individuals are able to get their EIDL loans or paycheck protection loans. They can use some of the paycheck protection to pay interest on debt that they've accumulated. So let's look at what we have here. Obviously, you have to be part of the. You have to be operational when the disaster is declared, and you can only go through SBA existing express lenders. It's the normal follow procedures. It's the normal size standards for the Express. As Chuck said, they're using the credit elsewhere and affiliation policies that were currently in place. So that's where we are in the Express Loan. I just want to also stress again that in order to get that, you do not have to. In order to get the refi feature, you do not have to use an Express Loan. You can use any type of short-term financing that you can get. Not much to this loan. Thank you.
And John, this particular loan is made by the lender, and so the decision's by the lender. It doesn't necessarily mean that you walk in, you're going to get it. It's a lender-driven decision.
Okay, let's talk a little bit about the economic injury disaster loans. Okay. I'm just reading a question that came across. EIDL, economic injury disaster loans. They are available to a little bit more small businesses and other organizations than previously. Normally, we do not lend to nonprofits, but we do under EIDL. In fact, under our other program, the PPP, you'll see that we've expanded that a little further. Our eligibility rules. The idea is to try to get as many small businesses and other entities the cash that they can get as quickly as possible. You have to be in the United States, and you have to show that you suffered some losses for working capital. You can qualify. This is a good point. You can qualify for an EIDL loan even if you have an existing SBA loan that is at the maximum. SBA's maximum were increased for PPL. Normally, SBA's maximum is $5 million per loan. If you are at that $5 million limit, you can still get an economic injury disaster loan of up to $2 million, depending on what it is. One of the things I did want to point out as well, as far as the requirements, on this loan as well as the PPP, there's not anywhere on the application for the borrower to ask for a loan amount. The SBA and your lender will work with you to determine your loan amount based upon either your payroll and expenses through the PPP or payroll and expenses and other things through the EIDL. So there a lot of questions we get is how much can I get? Where should I write that on the form? Well, it depends on the information you give us. We have a lot of flexibility on this. It goes out 30 years. As I said, it's now available for 501c3 nonprofits, tribal concerns, and others as well. And we're allowing up to 500 employees per location when it comes to EIDL. You'll have to do separate applications for each location of your business, but up to 500 employees for each one. It does greatly relax the credit criteria. There's no credit elsewhere test. There's no personal resource. There's no personal guarantee up to $200,000. The way this is working now, you get the $10,000 forgiveness, or we should say advance, and then at a certain point, a SBA loan officer will contact you and work out the rest of the details in terms of documentation that they're going to need back, collateral requirements, and other things. I could tell you that we are working as quickly as we can to get back to as many borrowers or applicants as we can. As you might imagine, it's been quite a strain on the system, and we are starting to enlist help from others outside the SBA in order to help us get through this backlog. So be patient if you've already applied, and we'll get back to you as soon as we can. Thank you.
Next slide, please. The Paycheck Protection Program as it relates to eligibility. John outlined much of the same things that the Paycheck Protection Program are going to look for relative to eligibility. And here, unlike the 7A and the Sba Express program, the SBA has, and the Treasury and Congress has loosened those eligibility requirements. So small business concerns were limited to number of employees and or revenue historically. They've simplified it to a certain extent to where If you have a small business concern with 500 employees or less, you qualify, including sole proprietorships, independent contractors, and eligible self-employed individuals. Now, there are certain other small business concerns that are eligible. Those in hospitality and accommodation that have a NACE code of 72 or starts with 72, it will be 500 people per location, which is different than historically the SBA has allowed under the other programs. So they have loosened some of the eligibility requirements. I would encourage you to stand by because that could also change in the next couple days as it relates to some of the interpretations of this. You know, do I have a partnership? Do I have, you know, if you have employees and you have payroll, chances are this is going to be an eligible loan, to simplify this to a certain extent. So again, the affiliation rules that I talked about earlier have been waived for the NACE code 72 and for franchises that are in the SBA franchise directory. So an individual franchise with less than 500 employees is okay. Tribal business concerns, 501c 19s, which is what the Veterans Organization meets the SBA size standard, and 501c3s with less than 500 employees, all are eligible. Let's see. Next slide, please. Here's the key to what a lot of confusion is, and I've talked to a number of accountants, some attorneys, and our collective interpretation of this varies. So basically, the Congress, the SBA, and Treasury has come up with a loan forgiveness process for these paycheck protection loan programs. Now, there's going to be fairly black and white eligibility considerations. There are certain things that will be eligible. There are certain things that will not be eligible. And then there are certain things that are gray today. I would encourage you to, when you apply for the PPP program, to think of it as a loan that you're getting from a direct loan from the lender that has a forgiveness portion to it. And I would ask for what you believe qualifies. Now, June 30th and after June 30th, when the forgiveness evaluation comes to play, some of those things may or may not be eligible, some of those gray items. So you, as a small business concern or a trusted advisor as an attorney or an accounting firm, should encourage clients to look at this with the thought that I'm going to get this money, part of it's going to be forgiven, but I'm prepared to pay the rest of it back over that 2-year period. So that is something I strongly encourage you to consider, because there are some gray areas. There's no reduction of forgiveness if the full-time equivalents or salaries of the PPP applicant or loan recipient for 30 days after enactment. Reduction of forgiveness amounts for wages cut by more than 25% during previous quarters between 2/15/20. So basically, this is going to be the more difficult part of the process. We're prepared as lenders to roll this program out, hopefully by Friday if we get some more insight from Treasury and the SBA. The forgiveness portion, the forgiveness calculation after June 30th is going to be the more difficult process that we're going to have. Next slide, please. Documentation requirements. Okay, let's talk about the different programs and what's required. Section 7A, the 7A loans. As any of you that have had an SBA 7A guaranteed loan, a government guaranteed loan, it's very documentation oriented. That has not changed. I encourage borrowers, when they're going to look for an SBA loan, to do as much homework as they possibly can. And the active lenders are going to facilitate an efficient delivery system. But the SBA forms, and there's a half dozen of them that are required, continue today. The borrower information is on the SBA 1919. The 912, which is that statement of personal history. Have I ever been bankrupt? Have I ever been arrested? Those are questions that remain today on all of the programs. The 413 is just the personal financial statement. And then the IRS 4506T is the request to get the transcripts from the IRS. So all of those things that take time to process will continue to take time to process. There's no change there. Financial statements, P&L for 3 years, balance sheet, reconciliation of net worth, interim balance sheets, all of these things, nothing has changed relative to the SBA 7A loan program or the Sba Express program today. And again, as I want to encourage you, an SBA delegated lender tends to be a little quicker than the non-delegated lender, but the documentation requirements are all the same for all of the lenders. Next slide, please. The Express Bridge Loan. John, you want to touch on that, please?
Sure, yes. And before we get away from the regular 7A, the last bullet point there where it says it's based upon the established policies of the lender. That's what I was saying earlier. You know, SBA will set eligibility and credit guidelines that the lender has to meet as a minimum. But if the lender has other guidelines that they want to follow, that is certainly something that they can do. The other part of this too that I wanted to mention before we get off the PPP program. Technically, the program goes live tomorrow. However, we don't even have our instructions completely out to the lenders yet. So we're telling folks to be patient with your lender. It's not their fault. They can't turn these things. You know, they can't change on a dime in 2 days based upon what we're doing. So it's going to take them a little bit of time to ramp up. The ones that are used to working with us are certainly the ones I think that are going to get them out quicker than the others. But it remains to be seen because it's going to be a little bit different process for everybody. And you'll see that. Chuck used the term delegated lenders under the 7A standard program. And really this is, from a delegate standpoint, 85% of our loans go through the delegated lenders, meaning that 85% of the time, no one from SBA will review this loan up front for the processing. We, of course, will do some credit risk management actions later on and take a look at portfolios. But the good news and the reason why this program continues to grow is the regular program is because the SBA, I think, has done a very good job of getting out of the lenders and allowing them to do these loans. And then making sure that they follow our guidelines later on. We have a very robust credit risk management office that does a great job. Next slide. Okay, the Express Bridge Loan, a lot of the same in terms of what you need. There's a Form 1919, and that's really more of a borrower information as well as a lot of eligibility questions. You're going to see, yeah, that kind of thing. You're going to see questions on there about the type of business you are, those types of things. There's a few other forms that Chuck had mentioned earlier that are available for that as well. Okay. Let me touch on the. Oh, I thought we were okay. Let me touch on next slide. Here we go. Economic injury disaster loan. Thank you. SBA forms. There'll be the loan application itself, and actually, when you go, we've made some of these forms items that will come up later. So when you go onto the SBA website to get an Idl loan, like the Idl loan, it's about a 15 to 20 minute process now. The loan application is key. The 4506 is key. Some of the other, the liabilities, they now have put that in a form. They've incorporated that into the application. So the application form is a little bit shorter. It's a lot easier to use. They're going to ask for less information up front, and later on they'll contact the borrower and take a look at liabilities and personal financial statements in those. So we've done a great job. If you haven't gone through the new process, they're going to contact you to see if you want to get the $10,000 up front. They'll send out an email which will allow you to do that as the forgiveness portion. And then, of course, the last piece, the tax returns. You won't need the tax returns up front. That'll be something that we'll ask for later on. The website is actually working very well since we changed over to a more simplified process. Next one.
Okay, the Paycheck Protection Program. Before we get started on that, I want to give you an idea. The 7A program, the Sba Express program are all centered around a lot of lender certifications. The lenders certify that they have done the due diligence to make sure that the borrower is eligible, it cash flows, it meets the lender's policies and procedures, and there's a tremendous amount of scrutiny and pressure on the lenders to make sure that those things are accurate. With the Paycheck Protection Program, that responsibility is lessened to a certain extent and more so on the borrower with certifications. You know, this program is designed for small businesses to supplement the payroll, make sure we're keeping workers employed and handling operating expenses over a period of time. So the fact that we're not doing financial statement analysis, in-depth credit criteria is kind of moving away from that and focusing on what's important as to the mission or the objective of this program, which is, again, keeping workers employed and covering operating expenses for a period of time. What we know is that we have an application today. It's Form 2483, and for most of you, you've probably seen that. And for many of the lenders out there, they have anticipated what the SBA is going to ask for, as we have. And so today, we know it's Form 2483, which is the application program, and it's centered around borrower certifications. Is the business owner or any owner presently suspended, debarred, proposed for debarment? Has the business or any of its owners or controlled by any of them ever obtained a direct or a guaranteed loan? So these questions on that application are more centered around borrower certifications. And that's important for everyone to know, because I sense that we'll find out what else is needed to get these applications approved within the next day or so. We have to if we're going to deliver this product by Friday. It should be a minimal amount of information, and the lenders will be focusing on payroll expenses, operating expenses for the covered period, and less on the things that they normally would look at under a conventional 7A 504 or Sba Express Loan. What a lot of lenders are doing today is trying to prep their borrowers or small business applicants and getting ready for this huge influx of applications. And the challenge with us in the field is that we don't know exactly what's required. We as an organization anticipate in the next week having 5,000 applications coming across our desk. How long is it going to take us to process these? If it's going to be a minimal amount of paperwork, it could be 15, 20 minutes. If it's going to be more documentation characteristic of some of the other programs, it could take a lot longer. And it's going to vary lender by lender. You'll have some lenders that will have an automated process, those larger, more active lenders. And then you'll have some lenders that will not, but they want to make sure that they take care of their borrowers. So again, like the 7A program, we're going to be required to provide a certain amount of documentation. How it's delivered is going to drastically be dependent upon each lender. And given the fact that we as an industry don't know precisely what the final documents are going to be, and rollout is supposed to be tomorrow, it's a very interesting time. John, anything you want to add on this? Okay, let's move on to the next slide, please. Application process, cycle, and disbursement. This is what everybody wants to know, certainly. The SBA 7A loan program is the standard bearer of what we do, most of us. It's the largest loan program that the SBA offers, although the SBA 504 is a great program. It's an economic development program. Focusing on the 7A here today, the process, again, is very lender dependent. The SBA is going to require those documents that we outlined earlier, the personal financial statement 413, the 1919 and the 1920. But each lender is going to have their own credit criteria and their own risk profile and their own delivery system. Some lenders that do 1, 2, 3 loans a year, the delivery system is going to be less efficient than those larger shops that do tens of millions of dollars a year. So this, again, is a very lender-driven process. You have 100 lenders in any one market. 20% of those, you're going to have a relatively consistent process. The other 75 or 80% are going to be dependent upon a one-person shop or a two-person shop that they're also working with other commercial loan borrowers. So again, application, process, cycle, and disbursement is all lender-driven with certain requirements by the SBA. What we've found in this particular program is that those lenders that are unfamiliar with eligibility requirements or the standard operating procedures that change every year will tend to be non-delegated lenders that will package the loan, think they have a package, they'll send it to the center, it'll get kicked out 1, 2, 3 times, simply because they don't know or they don't stay on top of the policies, the procedures, and it's a less efficient process. The 20% of the lenders in the field that do 80% of the loan volume, it's a different delivery system. Again, that's the difference between delegated and non-delegated. Okay, next slide, please. The economic injury disaster loan application process, cycle, and disbursement. John, please.
Okay. Thank you, Chuck. So yes, this is the direct EIDL is a direct. You can get there from SBA.gov. If you'll go directly, you'll see it as an option. You could go directly there and say SBA.gov/disaster. That'll take you directly to the page. You'll see it in terms of the application I had mentioned earlier. It's a more simplified application. For instance, instead of sending us all of your information on your monthly income statement, we simply ask you for the sales and then the cost of goods sold, and we do the math from there. So we've made it simplified on some of those questions, and there's been a quicker turnaround time. This is, this is the one that features the immediate $10,000 advance on the loan. It was advertised at getting it out to you in 3 to 4 days. I'm looking for people to come back with me and to let me know what, if that money does come back to them that quickly. Now, this was really only opened up on Monday, so we'll see how that cycle works. But I think it's been pretty easy. It's been going right back into your bank account, from what I understand. So the cycle time, I think we put in here 30 to 60 to 90 days. I think that's realistic based upon the last disasters that we did. That's not saying, you know, that you're not going to get any dollars. You're going to get the $10,000 up front. You're going to, once you get approved, you'll get another $25,000. That's not going to be forgivable, but it will be a quick cash. And then beyond that, there will be a loan officer that reaches out to you. So we are probably looking at 60 to 90 days, which brings to mind the importance of the bridge loan. All right.
John, just a quick question before let's back up for a second. The economic injury disaster loan, like a lot of the disaster loans, is dependent upon a delivery system from the agency. So you, as a young SBA lender years ago, worked in the disaster loan program and processed what? How many loans in a month?
I worked on Katrina back when I had hair, and we looked at, we were doing ourselves, 250 loans a month. We probably worked on them for 6 to 8 weeks during that time.
That gives you an idea that the SBA is going to staff up to do this, and right now the turnaround times are a lot longer than anticipated, but everybody's applying for these.
Right. Correct. We're reaching out to other organizations as well to help us with this program. Absolutely.
Okay, let's move on to the Paycheck Protection Program. The application process, cycle, and disbursement. That's the million-dollar question. Number one, we know that we're going to roll this out Friday, assuming that we're going to get some more direction from Treasury and the SBA. And so everyone's lining up, everyone's preparing loan documents, what they think is going to be required. All we have here today is application 2483, and then the supporting documentation relative to payroll. On the phone earlier today with an accounting firm, we talked about, focusing on the purpose of the loan is for payroll and some operating expenses. And so as a small business applicant, focusing on getting that information together is probably key, whether you go into your small community bank, a mission-based lender, or a credit union. You're going to probably need that information, we know. The program is intended to get money out the door. We as an organization have an online portal where we're going to have our clients' borrowers go online and apply. We believe that we can process X number of applications depending on how many touches. If it's a minimal amount of information, we could do something in 15, 20 minutes. If they're going to require more documentation, it's going to be longer. So the delivery and the cycle is dependent still on what we're going to know or learn in the next day or so. It is streamlined, so we're not going to have 2.5 inches of documentation that's required on the 7A standard program. So it's a minimal amount. All right? And again, the focus here is on borrower certification.
Hey, Chuck, we're losing you a little bit on the sound quality. You may want to speak up a little bit.
You as a borrower will certify that this is the payroll figures, these are my operating expenses. And again, I want to encourage you walking into this transaction to understand you're looking to borrow money, and hopefully a good part of that is going to be forgiven. But like I said, those gray areas that we don't know may not. So going in and applying for a loan for forgiveness is probably not the best path, but going in and applying for a loan where a good part of it's going to be forgiven is a better mindset going into these types of transactions. Loan approvals and disbursements, like I said, are going to vary by lender, but I think the intent is 14 to 30 days. And we as an organization hope to be on the 7 to 14 day side. So again, it's going to vary as lenders become comfortable with the process. Many of the lenders have called me and said, Chuck, do we have to do this? Do we have to make this loan? No. The direct loans, the EIDL loan that's directly from the SBA, you can borrow the money from them. Anytime you go to one of your lenders, it's their decision. Do they want to help their existing borrowers and no one else? That's a decision that each lender, each 100 of those lenders in any market are going to make. Some are not going to want to do this at all. They may be fearful of not having a guarantee, but most of them will. Most of them want to take care of their clients. So this is a great program. We don't know everything about it. Hopefully we'll know today, tomorrow. But again, the application, the process, the cycle of disbursement are going to vary by lender by lender. Next slide, please.
So Chuck, if we could just back up to the Paycheck Protection Program, because we've got
please.
We've got about, you guys did really well on time. We've got about 9 or so minutes under our budget. So I'd just like to focus a little bit on the Paycheck Protection Program. A few things. One, can we talk a little bit about the standards that are going to be released soon? As you pointed out, I think earlier in the discussion, these things are still being developed, have not yet been communicated to the lenders, and the impact that will have on the application process. I have some clients that are of the mind that they're going to wake up tomorrow morning and submit an application. And of course, what I think about is, well, an application for what? The lenders don't yet know what all the documents that are going to be required. We can perhaps infer some things, but we really don't know. So practically speaking, can you talk to me about the impact of just having received as a lender loan standards, which I'm assuming are going to be tied to your guarantee, you being able to maintain the guarantee for conforming loans? What's the practical impact of that on the application for borrowers?
Tremendous amount. What's going to happen? You're going in and you're applying for money and you're not listing the amount you need. What they're doing is for employers, they're looking at salaries, wages, commissions, or those similar compensations, payment of cash tips, payments for vacation, parental, family, medical, or sick leave, allowances for dismissal or separation. So those are the things that are going to drive how the lenders are going to fill these applications out, or how the borrowers are going to fill these applications out. I suspect that monies aren't going to go out the door for at least a week. But that's just speculation on our part.
But
There's
even
a lot
in terms
of things
of
that are... I'm sorry, go ahead.
Yeah,
Marco?
but even in terms of just processing the application, right? I mean, if I submitted an application today, you get the application form and maybe some documents that I think you might, as a lender, might want to see, but maybe not all the documents that the SBA or the Treasury are going to require lenders to receive from borrowers before the loan is closed. So if you receive those standards tomorrow, how long is it going to take you to sort of, I guess, communicate that to your lenders, to your clients, and then to have them be able to respond, and then how does that affect the processing times?
Okay, now, Marco, that's a great question, because again, if you recall, this is all SBA lenders, all FDIC insured institutions, all credit unions can now offer this program. They don't have to have that SBA designation. That's number one. So there are going to be a lot of lenders that are totally unfamiliar with SBA products and services, processes, and procedures. So that's an unknown. Number two, all of these lenders will be delegated. So none of these lenders are going to be contacting the SBA for a decision. So now you have a space of 4 or 5 times the available access points for this money from lenders who don't understand the process, the procedure, the liability. As I encouraged earlier, most of these programs historically have been lender certified centric, whereas today it's borrower. So until the lenders become comfortable with loaning the money out, with addressing how to come up with the loan amount and the forgiveness amount, it's going to be a slow process, and it will vary lender by lender. So as a small business applicant, be prepared for as much documentation as you can relative to payroll, operating expenses, and those types of things which this program focuses on. Does that help?
Yeah, I mean, the idea is that for non-conforming loans, as a compliance matter, again, getting back to the documentation, what's the consequence, Chuck?
Well, the consequence is the borrower is going to have to pay it back if it's not forgiven. And so what happens if we go in and I sense that the advancing of the money will be quick, will be easier than the documentation of the forgiveness. Because what's going to happen today on a call with the accounting firm, they were drilling down into the minutiae of what's eligible in payroll expenses and what's not eligible. And there were a lot of things that no one knew. So we ended up saying, well, let's go into this again with the understanding that some of those things may not be eligible, but it hasn't been addressed today, so we may have to pay that back. And so again, as a small business applicant, be as prepared as you can with as much documentation and go into it with your eyes wide open, knowing that the access points or the delivery system is new for everyone. Even the experienced lenders don't know what they want or how to deliver this at this point. We're all struggling with what do we need, what don't we need, how many applications are we going to get, do we need to lend this to all of our clients, or can we make decisions and turn people down? Lots of questions that haven't been answered. So that's going to impact the delivery and the checks going out the door.
And so the submission of the application is very unlikely to be a tomorrow morning thing, more likely to be, well, I mean, maybe not even tomorrow afternoon thing, right?
Our staff is going to be prepared to working over the weekend, and I'm sure a lot of the direct lenders that want to serve their clients are going to be working 24/7 to make sure, number one, that we understand it, number two, that we've mitigated all the risks to get this access to capital out. And if we can achieve those two things, then we work on delivery. And like I said, as a small business applicant, just be prepared. You may have your bank asking for financials, aging of accounts receivable, and all of the things that are associated with that regular 7A product, and you may go across the street and all they want is your payroll. So it's going to vary lender by lender.
Okay. And last
John,
point,
anything
we've got
else?
a couple more.
Okay. Yep. So, I'm sorry.
No, John, do you want to weigh in on that? Okay. I don't think we can hear John, Chuck.
Oh, can't hear you, John.
Oh, sorry about that. There we go. Unmuted. Is that better?
Yep.
Okay. I think just to emphasize what Chuck said in terms of patience, even our most experienced lenders are trying to grapple with this and try to make it work. And even though the program goes live tomorrow, I have some lenders that telling me they're not, even the most experienced ones are telling me they're not going to be ready for at least a couple of weeks to get this set up. So depends upon where you go and how fast we can get them out. SBA is going to work with the lenders, and we're creating a search feature where you can find a lender that will offer this program. The number one thing we always encourage folks, though, is to, if you already have a relationship with your lender, please stay there and work with them as best you can. And, as Chuck said, it may be that, the lender does this for some of their best customers first before they look for outside other small businesses that are not customers, and that would be a concern. So you want to stay with your lender. We're coming out with, we're being told that the SOP will be ready in the next couple of days, and we'll all be able to take a breath this weekend, take a look at it, and see where the requirements from SBA are coming, and just stay tuned and be patient. Thank you.
Marco, this is Chuck again. One of the things that I do want to bring up, Treasury and the SBA changed the interest rate from 4 to 0.5%, and from a possible 10 years to 2 years. Now, what does that mean for small business applicants? It means that the banks are probably going to want to make sure, and the credit unions, that they take care of their clients. The banks that were going to get into this for the windfall of of revenue that's coming in the door that will do it for anyone are probably not going to. And so it changes the appetite for the access points from trying to get everything we can because there is dollars to be made to, okay, let's be prudent about it and maybe we're just going to take care of our clients. That
Right.
makes a difference in the delivery.
Yeah, that was my next question actually, because at a half a point, how many resources can you devote to processing whatever, thousands of applications and for whom and how fast? And I have to imagine that had some impact, right? So,
Absolutely.
Okay. Okay, so let's move on. I mean, there's some other questions we can get to it too in the Q&A around PPP. But what I'd like to do now is sort of turn to summarizing the information that we just heard. We probably spent a larger amount of time talking about PPP than any other programs, probably not as much as some would like. But the point is, as we mentioned at the start of the call, that people are stopping for a second and carefully considering their business strategy. Next slide. So this matrix really is intended to be used as a tool to sort of step back, and obviously it doesn't capture all of the details with respect to these loan products, but some of the larger ones that we would expect businesses to be focused on in their analysis. So Alvin and I are going to be Alvin's going to start us off by sort of talking about some of the business considerations that he and his companies have made around these loan products. But as an example, and we can either stay on the matrix while Alvin works through his bullet points and discussion topics, or we can go back and forth, whatever's easiest. But I would just like to point out by way of example that if we look at the matrix, we see, some may have a larger maximum loan size, a shorter term, deferment, forgiveness available, and others require more documentations and others less. And so the decision of whether to use one product or another is sort of more complicated than simple, and it's more complicated certainly than whether or not the loan can be forgiven, if at all. Alvin, do you want to start us off on the next slide?
Sure, and Marco, and we can actually just leave it. We can leave it on the summary slide.
Yeah.
Okay. I want to make this more of a conversation as we kind of talk through exactly what we're dealing with as business owners. I mean, I certainly appreciate all of the listeners that have joined the webinar, and we're all in the same boat. And I think one of the challenges that as a business owner, you're dealing with caring for your employees and their families through a very traumatic time, but in the same respect, you have to be able to make payroll, manage your vendors, and also still be able to deliver the services to your customers. So I think what we want to talk about today, I really want to focus on kind of three large themes as we kind of evaluate where we are and just the steps that at least we took and how we approach the marketplace through and try to manage this environment. I think it's really important you understand your capital sources, you understand the programs, and I think being on this webinar is a very good first step because there's a lot of information that's that's floating around in the marketplace right now. So it's good when you have the opportunity to kind of get on with officials from the different agencies, advisors, to be able to understand, and really kind of get your hands around what the real information is versus what the speculative information is. And I think it's a theme we've heard even as Chuck and John were going through describing the programs. Being prepared. Right? And a big part of the preparation is the ability to kind of aggregate all the anticipated documents you're going to need, because even when you go through the process, there's always going to be additional supporting documentation that the lenders are going to require as they kind of evaluate your loan application. So that's a key step, and I think that if you've heard nothing else in the theme is that nothing else that was consistent through the presentation today was that lenders vary, right? And so there's going to be a wide range of variability depending on which lenders you're dealing with and what's going to be required. So the prudent thing would be to gather all the appropriate information that you can. That way you're over prepared to provide them whatever they need in an expeditious fashion so that they can continue to move through the underwriting process. And then finally, it's just really, once you've done the first two, it really comes down to executing your strategy. The big thing that I think that most businesses, and it's a challenge when you're in an environment like now, but we have to take a deep breath and say, okay, let's focus on really evaluating where we are as a business, and doing that critical business and financial analysis to really think through the appropriate strategy. I know we're all dealing with triage right now because we have some immediate needs we have to address. But I think this is also an opportunity because there's so many additional programs as we've gone through the day to really say, okay, which one is best for me? And I think I believe it was Chuck. I know just anecdotally as I've talked to other business owners in the community over the last several weeks, there's a lot of attention on the Paycheck Protection Program. But again, there's some exciting things going on with some of the other programs we discussed today that may be a better fit, with a little planning, a little understanding of how those programs have been modified somewhat for the current environment we're in. So I think it's really important that you kind of look at all the programs and try to come up with a strategy so that you can best use all the tools in the toolbox.
So, Alvin, I know that you, in your analysis for your own companies, have looked at things like the $100,000 cap on forgivable salaries on the PPP portion. You've also probably considered the 25%. The fact that, and this is listed in the matrix too, that only 25% of the loan amount for the PPP program can be used for non-payroll expenses, and how that factors into whether you use this program or a combination of others. Can you just kind of talk a little bit about that?
Yeah, and that's you make a very good point, Marco. Thank you. We're in the cybersecurity business, right? So we have a lot of highly skilled technical people that work for us that are going to be impacted. And one of the things that really jumped out at us was we were doing our analysis last week. For the information we had that came out on the PPP program is that it excludes any salary amounts above $100,000, right? So that's really important because you get a chance. Oh, this is my payroll, right? And I know we referenced it earlier in the presentation, but again, the payroll amount that will kind of be the benchmark for determining the value and sizing of the loan is really based on the payroll amount from the previous year, right? So if your business has grown, the payroll amount may be significantly higher or significantly lower, but it's going to be based on the amount from 2019. So if your business is, if you have less people on payroll than in 2019, you may not want to take all the proceeds you may be eligible to receive via the program, right? So, one of the things that we did, we went through and did the analysis, and we, I can tell people all the time, the devil's in the details, right? So you want to try to understand as many of the details as you can, and I know it's a challenge because a lot of the details are changing on the fly, because we're all trying to figure it out at the same time. But those are the important details to help you really determine what's appropriate for your business. The one thing I want to make sure I leave you guys with, and you take away from another business owner, just because it's available doesn't mean you have to take every dollar you're eligible for. I think Chuck may have mentioned in his presentation that you should be prepared that this is a loan, right? So if you're eligible for $200,000 and you feel as though, hey, once we kind of do the reconciliation for the forgiveness at the end of June, we'd be comfortable paying back $100,000. Maybe that's the appropriate amount for you if you're not quite sure what the forgiveness criteria are going to be. So those are some of the considerations that as we did our internal analyses that we looked at to try to come up with a comfort level. What's the right amount of capital that we should apply for? With any of the programs, whether it's just using the economic injury disaster loan or we really kind of only really evaluated two of them for our purposes, and that was the economic injury disaster loan and the Paycheck Protection Program. So, so that's just something I think everybody should keep in mind. And it's also pretty important that look, you have folks like Marco. You guys have, third-party advisors, accountants. It's really important that you seek out the advice of your, kind of the third parties that you work with. Like I said, there's a lot of information, and it's just, it's very, very important that we speak with folks who have, access to the correct information or the most accurate information, because you don't want to spend a lot of time and energy, working on, some assumptions, because one thing we don't have as business owners is excess time. So it's really important you try to get to what the salient points are. Make sure you have all the documents prepared, and be able to get that stuff into a lender's hands so that as they navigate all of the processes and interacting with the SBA, they have all the materials they need, so they don't have to call you back and ask you to send something else while you're on a client site trying to manage the business. And with that, Marco, maybe we can just kind of transition to taking some questions from folks in the on the webinar. And
Sure.
Yes.
Great. Thank you. So a couple things. One, the CLE code for those that are in need of CLE credit is S as in Sam, the number 4991, SS 4991. So now we'll go to the Q&A. We've got a few minutes to answer some of these questions. Chuck, I just wanted to go back for a quick second. We were talking a little bit about the certifications. What we were talking about really were the standards for documentation and other things for originating these loans. We were talking about that in the context of the fact that they are 100% guaranteed. And outside of the fact, and it's true that borrowers are providing the certification as opposed to the lender. But is there, I guess the question is there any risk of the lender, is there still any risk, despite the borrower certification, of the lender losing the government guarantee?
Marco, that's a good question. That's an unknown, but certainly the lenders have to be prudent about evaluating, the information that's coming across their desk. And I don't know that there is a certification for that, but that's one of the tasks in the approval process.
Correct. Right. Don't know yet, but I suspect that you all will be proceeding very carefully, as you indicated, and sort of evaluating how you're going to deliver this program.
And characteristically, when I talk to like the chief credit officer for the bank, they're used to this. They're used to making sure that there's lender certifications, and we're just not going to hand money out the door. We want to make sure when we write those checks that the people deserve it. So you're going to have scrutiny. It's going to vary again by lender, and some will just take the app and then the money will go out the door. Others will say, well, I want 3 years of financial statements, and that might be overkill. So it's lender by lender. And John made a good point. Go see the bank that you're working with or the credit union that you're working with today, and if they're not providing this kind of relief, then go someplace else.
Right. Okay.
So sometimes
let's move on to
relationship driven. Even if it's a program like this, you tend to be more successful if it's relationship driven.
Particularly with respect to the changes in the interest rate over the last week, I would imagine that's even more so the case. Okay.
And we as lenders are fearful. I mean, you raised those good points. As lenders, we're fearful of what are we missing here? What's going to come back to bite us? And that's on people's minds.
Mm-hmm. Okay. So I want to talk a little bit about affiliation with the panel. We kind of went through quickly over the sort of the intro slides, but the affiliation rules really are whether the SBA will count the size of other entities, domestic and foreign, in determining your eligibility as a small business or as a business for this program. There's been a lot of questions around sort of foreign-owned subsidiaries with foreign-owned entities with subsidiaries located in the United States. Other questions around venture-backed private equity entities. Can you all, John and Chuck, just sort of speak about how the SBA and banks have historically evaluated that criteria?
Sure. This is John. The SBA historically has looked at foreign-owned entities that have operations here. You have to be U.S. based. You have to use the use of proceeds in the U.S. and even if you have a U.S. based company that uses some of those overseas. I just recently talked to a company that has a warehouse in Dubai that they wanted to improve. We don't allow that under our program. It's a U.S. domestic program. And in terms of SBICs, a lot of times what we run into, venture capitalists, SBIC is a term that we use for them. But in terms of the venture capitalist, one of the rules that SBA has is anyone that's 20% or more guaranteeing a loan, a regular loan. Some of these personal guarantees have been waived under the current circumstances for the disaster program and as well as the PPP loan. But under our regular loan program, personal guarantee of anyone that's 20% or more is required. I've never seen that waived for our regular program. So that ends up really kind of disqualifying a lot of venture capitalists that have a stake in a company, because when we look at their personal assets, they're not going to qualify under credit available elsewhere. So that it kind of backs into it where we don't really guarantee loans to a venture capital to a firm that to a company that has a venture capitalist firm that's working with them. If I might add, Marco, there is some information here. Again, getting back to what Chuck said, the 72 NAICS code category is expanded, as well as if you're a franchise that's already registered with SBA, that is expanded as well. There were folks that wanted to expand it even more. It didn't happen on this round. We'll see what happens as I said, the new SOP comes out this week, so we'll see. But this expansion will not include any more NAICS codes at this time. Thank you.
So we are planning, we are talking anyways internally about maybe having a focus webinar just for franchisees. Can you talk a little bit about, that was actually my next question, is with respect to franchises, can you talk a little bit more about some of the more complicated applications that involve franchises? I'm imagining all of them would have to be registered, otherwise they get rejected outright. But can you just spend a couple minutes talking about that? Franchises have always been something SBA has looked at closely. We worry about eligibility quite often, and we're good as an agency when we worry about eligibility and allow the lenders to make the credit decision on their end. So in terms of eligibility when it comes to franchises, we've always said that you must be small, you must be independent, you can't have too much control from the franchisor. And then we register you, and you must be running your own business. It's just, some of these franchises are set up with so much control that that you basically bought yourself a job when you buy one of these franchises. So there's not that many franchises that actually are ineligible for SBA. There's a handful of them out there. We've worked with them. The list is available for the folks that can, the franchises that are eligible. And we spend a lot of time going through the franchise agreements to make sure that they fit our criteria. Thank you. Great. Okay. Any other, I think we're just right at the end of our time here from the panelists. Any other topics that you'd like to discuss? Okay. I have one other question I'd like to ask. So there's an application that's been made available. Has there been any discussion about maybe changing the application? Already we've gotten a number of questions today and before today about the application itself. What does jobs mean? Why isn't there a field to put my NAICS code? John, can you talk a little bit, John and/or Chuck, can you talk a little bit about that, whether there's been any changes that you think are coming for a new application and some of those other issues around the listing of the NAICS code, how the SBA or the lender in this case plans on evaluating NAICS codes? Are they going to enter spam and just look at what's listed? Can you talk about that, please?
Yeah, we're the applications are out. we're waiting maybe on some extra interpretations of the questions that we've had. For instance, what documentation is going to be needed by the lender. We're waiting. The lenders are waiting for more instructions. There's not going to be any changes at this point to this program that we see at this time. I mean, it may change later on. I mean, some things have changed within 24 hours, depending on our relationship in working with Treasury, and then what we're going to do on the SBA side. So stay tuned. But right now, the applications that are printed up and going are what we're going to use going forward, as far as we know. Thank you.
And again, Marco, we don't want to speculate. That's the last thing, because there's been just so much of that.
Great. So that brings us to the end of our time. I want to thank the panelists and attendees for their time today. Please be on the lookout for updates on the April 9th webinar. And as I mentioned at the start of the call, please visit our COVID-19 Resource Center. Contact your Seyfarth attorneys for any questions with respect to the information you've heard today or with respect to your application generally, or you can send me an email to mwbarnes@seyfarth.com. Thank you.
This concludes today's webinar. Thank you for attending. Have a great day.